welcome to Business Today. I'm Siddharth Zarabi and we continue our coverage on day 3 of the World Economic Forum here at Davos, and with me now Neeraj Kanwar, the Vice Chairman and Managing Director of Apollo Tyres. Neeraj, welcome to the show. 3 days here and the first day completely overshadowed by what was happening in the United States every 4 years, and the date doesn't change. So very clearly many of the expectations that industry leaders had of the new administration playing out, some not playing out, particularly on import tariffs. The new government in the United States seems to be holding off, perhaps likely to adopt a more calibrated, cautious approach. Is that a good sign for markets and overall trade globally?
See, I think with the new president coming in, obviously the domestic market of US is going to shine. Donald Trump has already given a lot of key indicators that all emphasis is going to be on the US market and on the end consumer, and also job creation. So I think as far as India is concerned and the US is concerned, we have a very good relationships between the two governments. The Minister Jaishankar has already been to the US yesterday. So there are good signs for us that we don't see tariffs coming. I hope we don't see tariffs coming as far as Indian products into the US is concerned. So that's I would say a positive sign for India, because we do business in the US. We sell tires in the US. My whole emphasis and focus for the next 5 years is the growth of the US business for Apollo in America. So we are selling car tires and truck tires. So for me, it's a positive sign that I see the US economy growing in the coming next 5 years.
Neeraj, if tariffs were to come and if they were to impact your sector, would it mean that you would have to sort of double down on manufacturing capacity locally in America, because that is the larger objective of the government there?
So, sir, we don't have a manufacturing facility first in the US. We have manufacturing in India and in Hungary and in Holland. So currently our tires are going from India and from Hungary. So in that case, if that were to happen, and we will have to see how much is the tariff and does it make sense to then sell in India, in the US, is it that going to be much more costly or much more expensive? At that time, we'll have to obviously rejig our supply chain to other markets and to see how we can try and circumvent that tariff in the US market. Okay. But it will be a challenge if that happens.
Okay. Broadly speaking, do you think the relationship that exists at the political level between India and the United States should now translate into a much more deeper trade engagement where some of the irritants are sort of done away with? We know the kind of approach that our government has had in the past 10 years to free trade agreements. Some are being reviewed. We've gone slow on some. Is it time for the government of India to sort of reapproach trade relations with the United States in a more engaging and aggressive
Yes,
manner?
I think it is very essential because India is shining. India is one of the only growing economies in the world, 6.5% GDP. And then, like I said, I believe that America is also going in the right direction. It will go in the right direction. So it is very important for India to have better ties and better trade agreements with the US. Not only trade, but you please see in the IT high-tech segment, most of the high-tech in Silicon Valley is by Indians. So we need to see how those jobs are kept well secured, because the entire industry is dependent on the Indian people who have gone there and are the high-tech people. So it's also trade, and it's also in the tech area where India and America have to play a very important role.
And thankfully, President Trump, after being sworn in, has endorsed H-1B. He's been pretty clear about it, and that's good news. Let's shift the focus to the domestic economy. Overall macro, some slowdown. In the sector that you sort of work with, in automotive, we've seen some bright spots, some areas that could have perhaps done with better growth, and a divide between urban and rural consumption. How's your reading of the overall demand, particularly for your sector within India?
So, the first 9 months of the year have been pretty bad. CV sales are down, as you know. Car sales are down. And I guess it's because of the slowdown in the economy. A lot of elections have happened, so people are holding back to buying vehicles. During Diwali, normally it's a festive season, people do buy cars and people do buy trucks, but we didn't see that kind of traction in the market this time around. But coming in this quarter, we're already seeing CV sales going up slightly. We are seeing car sales going up slightly. So I'm pretty optimistic going forward, given that there's stability in the government, given that the economy will be stable, and they continue with their pro-business policies. I think fiscal year 26 is going to be a double-digit growth for both vehicles, commercial and for passenger. As far as Apollo is concerned, because we are the leaders in truck and in passenger car, we've had a double-digit growth in CV tires and in farm tires. Agri has been good. In passenger car, we've had a high single-digit growth because we've come out with newer products, newer premium products, opened up more distribution channels, going more into the rural markets. So that's why we've been able to sustain our growth. And going forward also, I think, yes, it's a good time. Like I said, I'm optimistic to see a double-digit growth even at Apollo.
What is the likely scenario for pricing of products?
Well, it's a very thin line between natural rubber prices, oil prices, and what I can do with the customer. Obviously, the consumer is much more demanding. So I have to see how I can unlock value from the company to try and see we still are profitable, because the whole focus of ours is behind ROCE and increasing our ROCE, and which we have done. We've shown it to the investor that from a sub 10 we've gone to above 15-16% ROCE in the past 1 year. So because there's been a lot of focus on sweating the assets in the factories.
That's a very significant increase.
Yes, and to go capital light. So we've not gone with a heavy capex cycle, because for the past 10 to 12 years we've had huge capex. We've put up 3 greenfield plants in India and in Hungary. So now we are going capex light. We are putting in a lot of high-tech AI and machine learning into the plants, whereby through AI, generative AI, and through machine learning, getting data, we are able to increase the productivity of the equipments that we already have.
Neeraj, give me an example of the use of generative AI, just because everyone's interested in this.
So, you understand the equipment, let's say, in where the compound is mixed, where the natural rubber is mixed. I'll go a little bit technical, but
yeah, sure.
I hope your viewers understand what I'm saying. But that's the mother equipment where the natural rubber is mixed with a lot of compounds, a lot of chemicals. It consumes a lot of energy. It consumes maximum energy at that place because it's very energy consumable. And so we study through machine learning and data, and then through generative AI tells us which compounds are taking longer to mix and why. And so then you study that and you try and see if we can lower that cycle of mixing.
So greater efficiency.
Yes. So then productivity comes up and you get more idle time in that machine. And then that also goes back to you're using less energy. So that goes into my sustainability journey, which is consuming less energy. So we are also we've taken a target of being renewable energy in all our plants by 2030 by 40%. So I'm already at 25 to 26%, which is a mixture of solar and wind. So we are moving towards our sustainability targets, because even on scope 1 carbon emissions, we've come to around 23%. Our target is to get to 25% in FY26. So company is doing a lot on these areas of AI, machine learning, and on sustainability to try and see how we can make a better future.
You spoke about domestic consumption and the outlook for the market. I just want your comments about a recent brokerage report which said India is in a structural slowdown. Do you kind of agree with that, at least from your knowledge of through the sectors that you operate in the economy?
It is in a structural slowdown. People are waiting and watching, so being a bit cautious on spending. We see that happening, and that's why the vehicle population is down. But like I said, if government in the budget comes up with more aggressive infrastructure targets, more aggressive road construction targets, also simplifies GST, bringing it down from 28 to 18%, these things will boost the economy and boost the morale of the consumer. And then you will see the unlocking of the value in India, and you will see India back at 7.5-8%.
That's a very good point. One last question before I let you go for today. and this is your thoughts on the EV space. I've had other guests on the show here talking about India's EV space and what's happening globally, including in some ways the China keeping hold of all the technologies and that being an impediment. In the Indian context, how is the EV space looking to you?
So I think there's worldwide there's a slowness in EV. When you look at Europe, there's flat or it's even down. And I'm part of the Auto Governors Council, and we are discussing the slowness of EVs all around the world. The biggest issue that you have confronted is the supply chain surety, which China is producing everything from lithiums to batteries to cars.
Are they being short-sighted?
Yeah.
If the overall market slows down, China, which is trying to hold on, is it being short-sighted instead of everybody growing?
No, I think China is protecting themselves, and India is going to have an issue of assuring supply chain. And that is an issue which the EV manufacturers worldwide are going to face, because no country has an end-to-end surety of the entire end-to-end supply chain of EV. So from lithium to batteries to building the vehicle. And that's where China outruns everyone. So one has to see how one can cope up with China to make EVs successful.
Would Tesla be better off finally making an India call, de-risking China plus one?
We have to see how BYD does and how Tesla does.
Absolutely, Neeraj, and we'll wait for that to pan out. But thank you very much for your time with us today. With that, it was a wrap on this conversation. We'll be back with more. Until then, goodbye.
Hello and welcome. America's new President Donald Trump is threatening new